Welcome back to another episode of the XRP podcast. Today, we're going to be talking about what's happening not only around the current condition of the markets, because we've seen kind of this almost whipsaw approach. Ray Dalio gives us the 13 steps of what World War III are, and we're setting at number 9. There's a big one coming at number 10 that will pertain to all of you. And it's going to get into all things clarity, and also, I think, in direction of where we may see XRP heading into the mix very quickly for many reasons. And I'll break that down, of course, with Mikkel, who's going to be coming in here shortly. We will be at the XRP Las Vegas event, so make sure you guys jump over to the XRP Las Vegas website. We'll leave a link to it and show it on screen. But basically, what you have to do, get registered, get over to that event. Make sure and come by and say hi. We'll be having a media booth there, full on for you guys. So we'll be doing all kinds of interviews with some of the best in the industry. You don't want to miss that. We'll be publishing it here on this channel, on the main channel. So all that good for a show. Let me bring in Mikkel, because I want to kind of break down some things specifically that are happening right now in the market. And one of the things, Mikkel, first of all, welcome back into the show. How are you?
Always a pleasure to be here, and I'm doing great. How are you doing?
So we're trying to make this every Thursday, right? Is that the plan?
That is the plan.
Okay, so Mikkel will be here every Thursday. We're starting to line up a handful of kind of co-host models here on this show, so he will be a part of that on Thursday. So don't miss those. We will get those out to you guys for sure. Mikkel, you've got a couple of things happening right now. Ray Dalio comes up and he says, hey, listen, we're at the we're at the stage of, I think he said number 9 right now. Let me bring it up on screen real quick, and it kind of gives you a little bit of an insight here. There's 13 steps to his belief of World War III, and we're now at number 9. If you look at this right here, this is an actual breakdown of them. So here we go. You've got a low debt, sound money, rise of credit and debt. That's all been happening. The rise of financial center on markets, that's been happening. Let me kind of zoom in on that for you guys. Speculative bubbles, large wealth gaps. We've lived through that. Declining productivity. That's happening now. We're seeing that. The overextension, and this is kind of this military and geopolitical. I think this started back during the Ukraine war. Bad economic conditions, national debt. And then here we are, number 9 right now is where he thinks we are, which is at the printing money phase. What do you think about this, Mikkel?
Yeah, so in terms of Ray Dalio, I think a couple years ago, he went super viral in terms of his prediction that the United States was on the decline and essentially China was on the up and up. And
Right.
I don't think we've necessarily seen that, but I do think he was half right. I think he was absolutely right in the decline of the dollar. I think what he was incorrect on was the rise of the Chinese yuan as the replacement to the dollar. I think what we're actually seeing, and that plays directly into this, is the rise of different forms of a more multipolar world. So I think
Yeah.
that's exactly where digital assets are going to get plugged into the system. I actually think that is an off-ramp to a lot of the geopolitical conflict, because a lot of that
Interesting.
has been created through the manipulation of currency and the United States dollar essentially being used to wage economic war in all these different places. So I'm curious if neutral forms of value breaking up the economic conflict between these countries can actually be an off-ramp that might be counter to his idea that essentially the United States dollar is being replaced by the Chinese yuan.
Well, and I think the point that I won't push back on that, but I will say that what China has done in a very short period of time is they have become a global power. Granted, it was pretty much at the will of the United States, but they have been able to do it, because if you look back in the 90s and even in the early 2000s, China was not a threat at all. The crap that was coming out of China was so bad that, and I mean, it's kind of the narrative that everybody kind of points to, as the pop culture of, oh, is that Chinese made? That came from that era. Now it's a bit different, a lot better quality we're seeing globally. Obviously, the digital yuan has been a major force. They had kind of talked about digital yuan in the Strait of Hormuz for a minute, and then I think they realized, oh, wait a minute, some of these countries don't want to do the Chinese yuan because that could get locked down just like that. And then they offered the idea of actually accepting stable coins, which I thought was ironic, since those are mostly treasury backed. So is that what you're getting at?
You always come to the same recursive idea, right? And this is sort of where I think Ray Dalio has had a lot of stuff right, but in my opinion, this idea that you're going to have another centralized government issued fiat currency become that global bridge or that global settlement asset falls
Yep.
on its face for the same exact reason the United States dollar has essentially been removed or is being removed from that petrodollar status. You're
Hmm.
you're assigning a whole bunch of countries to be opted in to the United States' purview and control of that system when a lot of them would prefer not to opt into that system. So if you see what Iran is doing right now, there's been some talk about them potentially using stable coins, but I think the safer move for someone like them is actually to use decentralized neutral sources of liquidity or payment where they don't have to worry about what anyone has to say about it. They get
Yeah.
to control the value and the flow without having to worry about someone else stepping on their neck. And for allies like China, Iran has been seen as an ally to China, but how closely they want to be tied, like you said, to someone who still has that control, those types of relationships can flip on a dime. And I think it just really highlights the need in the
Yep.
system or a form of value or currency that can't be controlled. I think for a while that was gold, but it just doesn't have the same liquidity profile as
Sure.
something like a digital asset.
Well, and to your point, you look at his number 10, which is where you have the flight from currency. And once you see flight from currency, you're going to look at certain assets that have deep liquidity pools, international settlement capability, and of course, the ability to move at light speed. And there's only a handful of tokens that kind of fall into that category, XRP being one of them. Why do you think we haven't seen more of that now that we're getting the narrative? Because this essentially, I think what's happening in the Strait is teaching all of these other countries how to transact in something other than the petrodollar. So if that, of course, starts to happen, do you think we're going to see more XRP, Ethereum, a handful of other tokens being used in some of these global settlements?
Oh, absolutely. And I think that's exactly maybe where Ray Dalio might have has pivoted his thesis
Hmm.
over the course of the last couple of years because for a while it was that final stage was the Chinese yuan was kind of going to become the new dominant global currency. But in your step 10 there, the one that you highlight that he's kind of referring to now, it's a
Hmm.
flight from currency itself. So I wonder if he's seeing a very similar thing. Now, Ray Dalio, as you know, is historically a gold guy, right? But like I think we both see the issues in terms of trying to position at least physical gold in a place where you can have real fluid, real time economic trade. That's exactly what digital assets bring to the system. It creates an off ramp in control from the global centralized fiat currency and into decentralized neutral liquidity sources. That is exactly where I think an asset like XRP, an asset like Bitcoin, can be strategically positioned from a global level. And I just think we're at the very, very start of this. I think de-dollarization and deglobalization is a multi-decade trend. And I think we're just at the start of a technology being introduced to allow that to happen. So I would say that this is the dominoes just beginning to fall.
Don't you think, though, the TPS, the transactions per second here, are going to be really starting to get stretched hard if we do see an uptake? I mean, we're talking about maybe we could see 20, 30 countries start to do this. And when you look at and we're talking about, I think, what is it, 130 ships a day right now, just in the Strait? That's just shipping. Imagine if this starts to move into other trade. TPS is going to be a big deal, wouldn't you think?
Oh, absolutely. And I think that's always been one of the reasons why I have had hesitancy in terms of exactly how Bitcoin is going to scale into some of these solution sets. The
Yeah.
thing about the XRP ledger that I don't think a lot of people realize is there are a lot of different ways TPS can be scaled. And there's
Hmm.
not necessarily a reason today, as might be counterintuitive, to have the XRP ledger or to be focusing on jacking up TPS to a level that's not needed right now. you
Yeah.
listen very closely to like what people say who are very core to the XRP ledger, there is a lot of different ways that can be scaled up to a really big magnitude. But why focus engineering resources and time on scaling a number if we're not seeing consistent TPS maxing out what the XRP ledger can really do? So I think the
Mhm.
XRP ledger can absolutely evolve into having the TPS necessary through different things like wrapping transactions into batches and stuff like that in order to make sure we are meeting that global demand. The point that I think is more important, at least right now, because I think the technical capabilities of these blockchains is almost unlimited if you're willing to move in that direction and not stay stagnant like Bitcoin,
Yeah. Yeah.
is does society and do humans in general prefer to have a neutral liquidity source in the middle rather than a controlled one like the United States dollar? And if we do move towards that kind of no ruler, no boss sort of currency in the middle, I think the technical capabilities of change will really take care of themselves.
Well, and to your point, I think you've got a couple of things happening right now. Many people I know watching this would probably say, "Oh, but what about Lightning Network, the Layer 2?" That's still been kind of a theoretical. We haven't really seen it at scale. Could it happen? Maybe, but there are some breakdowns on that. I've had several Bitcoin guys kind of break that down, and it doesn't look good for it. But you look at the theoretical maximum right now, which is like, what is it, 10 to 12 TPS for Bitcoin? Um, block time still roughly about every 10 minutes. So I just don't know. I think it broadens it out. Bitcoin will be a part of this, as will XRP, maybe Ethereum, that starts to roll out. I think the bigger narrative here, Mikkel, is that now the toothpaste is out of the tube. People are starting to realize we could actually do this without the petrodollar. That may be the biggest fail, or was it a fail by the administration, or do you think this had some sort of grand architecture design? What do
I
you
think
think?
you can. It depends on how worried I think you think the United States is about the ability to continue to export dollars at scale. I think
Yeah,
there's a lot of talk about the Triffin dilemma, and it's hard to really wrap your head around if that is actually something the administration or the United States is worried about, and they want to be
yeah,
more of a regional power than a global power. That very straightforward. I mean, getting any kind of straightforward initiatives from the United States government is like one thing, but whether or not that's actually something they're pushing to is one thing. I think a lot of people can start to wrap their head around as a lot of these other countries and nations become more sophisticated that they just won't need to use the United States dollar. So I think there's probably a general understanding that as their economies are built up and as we have better liquidity profiles outside of a centralized source, that you're going to see people naturally not want to be so reliant on a single ruler or a single boss. So to a certain
yeah,
degree, I think the administration and the United States might be realizing that that just might be the case, and they're better off winning on something like a stable coin globally that people can opt into and take advantage of rather than trying to force trade through a specific asset.
yeah. Well, and to the point of timing here, because that's what we're dealing with now. If in fact we move into the printing money stage, which is what our current status is, whether we do that at scale, then I think the next stage is going to be the flight from currency. Obviously, we'll see an inflated currency that will continue to increase. And I think people are waking up to that, especially the younger generation now. They're realizing assets are the way to beat this game. My question to you is, how long do you think that takes before we do see, let's just assume 10% of currency. Let's look at the overall money supply. 10% of currency moving into assets. Do you think that would take 2 years, 3 years based on our current framework? Where do you think the timing is?
I think a lot of it has to do with the catalyst we continue to see. I think things like we're seeing in the Middle East and things like we saw in Russia, where we are freezing a lot of Russia's assets during the
Right.
Ukraine situation, I think those things drastically accelerate us towards that world. And it's something I've been trying to highlight, despite the fact that right now the market is looking at these events as negative, like for everything, right? Everything's sort of getting sold off. I believe it greatly accelerates a world where people are saying, okay, we need to have options out of this. this. Like,
Right.
the more we push on this circle, the more we push on the idea that these sort of things can just happen and there's nothing you can do about it, the
Hmm.
more people are going to need opt outs of the system. Whether or not they need to use them right now, they at least need to be preparing or be ready for those things in terms of the next time the United States wants to do something like that with the dollar. So I believe we're probably on an accelerated timeline, maybe to get to that 10% number, maybe a 5-year mark. Um,
Okay.
but based off of what we're seeing, I mean, things could get ramped up extremely quickly if there is a necessity to really start moving in that direction. So that's generally where I would see it in terms of the current timeline we're on right now. But I just think events like this push us so much faster. I mean, the opposite side of it, right, would be if we were all just getting along. If everyone just said, you know, United States is the perfect partner, we can trust them under any circumstances. We'll just keep using the United States dollar because we have no reason to worry about that. That's
Hmm.
clearly not the case, and I think we're increasingly moving in the opposite direction.
You look at M2 money supply right now, I think is at 2022, almost 23 trillion, and it continues to go up. So that just a 10% move on that in near term, what that would look like, depending on where your arc is on digital assets or other assets, could be gold, could be, real estate, whatever you feel that is going to fit in this. Personally, I think the digital asset model is probably the only one to look at. That's a significant move to what's happening. And when you look at some of the things that Besant released today, let me share something with you real quick. This was his tweet this morning. Let's see, here it is right here. Um, this was his tweet this morning. It says Congress has spent the better half of the decade trying to pass a framework. It's time for the GOP to get a markup on the clarity. He put this in a Wall Street Journal headline, and I want to share this with you. This is the full article, but right here, I'm going to zoom in on this right here. Economic security is a national security, and it is the cornerstone of clarity. So essentially, he's saying that crypto is now national security. So he understands where we're going here. Obviously, the Dixie, if you're following that, the dollar value continues to fall. And this is, of course, also layering in the whole idea around what we're going to see in DeFi, because he even mentions that software developer protections are designed into Clarity. So something's up here within this administration. Where do you think he's going with this?
Well, I think he's going to where we ultimately also think it's going. And one of the things that I think is extremely telling is that, like, this is like no longer something where us enthusiasts and technologists are talking about the possible systemic importance of this asset in the financial system. We now have the Secretary of the Treasury and some of
Exactly.
the highest ranking people. I mean, if you look at the CFTC right now, the SEC, the Treasury, the OCC, these are
Yep.
all positioned and headed by people who are extremely pro digital assets, but
Hmm.
not just in a way where, like, oh, this is something you should invest a small amount of money in. They're talking about this as a strategically important asset class for the United States to get right, for the United States to continue to dominate in the financial system we're heading into. So I think, one, this absolutely gives massive validation to people who have been investing into this asset class that this is not just going to be some niche thing where some retail people are buying some tokens and the price is going up. It's a big deal.
Sure.
This is something that they are taking at a scale of strategic importance for the United States to get right. And I just think what he is saying is clearly in the direction that we are going to be moving a lot of financial activity and output to different forms of rails than we've leveraged before in the past. There is
Hmm.
no other reason why it would be so critical for the United States to get this stuff right. And I don't think he would be saying these things unless they were already underway in terms of development and already seeing movement in terms of where these things are going to end up. I think there's a reason why they are pushing so much on this, and it's because for a lot of the reasons we've talked about in terms of off-ramping from the dollar, treasuries becoming such a big source of stablecoins becoming such a big source of buy volume on treasuries, all these things they are starting to see as the new trends of the future in terms of where finance is headed.
Yeah. And you got wit right here. The US didn't become the world's financial center by hesitating on moments of technological change. So they know what we have known for years is that this essentially is the reformatting of the financial system. And if the US is going to be part of it, the one critical component, of course, is going to be clarity. So this is
When
all
when
tied
we
in.
first came off of the past administration, all I wanted was an SEC chair who was pro
Yeah,
crypto. I didn't think we were going to get CFTC, OCC, like the fact that we have every single position in the
it's crazy.
administration of financial importance extremely pro digital assets. Like that is the sort of thing that I believe gives so much validation and so much credit to where this thing is going because they understand strategically where the United States needs to sit in order to dominate this. And the fact that they are pushing this hard on a lot of these initiatives, I don't think they would be doing it if it was all about just people getting a small amount of speculation to the price of a token moving. I think
Yeah.
they see the utility and how deep this is going to run in replacing a lot of the infrastructure we run on today.
Okay, so many people would say, all right, well, yeah, we're going to have a financial reset, but isn't the dollar just going to continue to take over and we're going to continue to see it flow and, everybody's going to continue to buy on basically trading on the dollar. Then you look at some of the things that have been very erratic. One, of course, has been the issue of oil prices, energy. That's one of the biggest scenarios that play into inflation right now. So again, above $100 a barrel, literally just in 24 hours, we're up another 11%. This is after this U.S.-Iran ceasefire, non-ceasefire, backed and forth whipsaw, which has been going on for weeks. It just validates one thing, and that is that inflation is coming, and there's no way around it. So, I mean, what are you saying to your investors out there right now
Well, I
as
think
they
they're at
watch
kind of a
this?
quagmire too in terms of like the inflationary issues because I'm not sure if you saw the GDP print today, but it was at 2 points below
Yeah,
what they thought it was. They were putting it at
that's a
2.3%,
problem.
and it came out at 0.5%. So that's the scary scenario, right? You
Yep.
have oil putting pressure on inflation, and then you also have a deceleration in growth because you can't manage both those things at one time. You take down
Mm-mm.
rates in order to increase growth, but if you have growth essentially coming down as well, then you have the problem of okay, well now you have inflation going up, you have growth coming down, you can't have rates fix both those things at once. So I think the Fed is going to have to say no matter what we do with interest rates, we can't fix the fact that the Strait of Hormuz is closed. That's a policy issue. So they're going to
Yeah.
be forced, in my opinion, to make a tough decision here. Are they going to say that we need to drop rates to reaccelerate growth and fix some of the
Mhm.
things that we're seeing in the labor market? Or are they going to say, hey, we're going to try to just nuke the United States economy so much that it's going to counteract what we're seeing in terms of the Strait of Hormuz? I have a hard time they're going to make that call. I think to a certain degree, this has become a very tricky balancing act for them. And I still do believe, regardless of what we see on the inflationary point, they are going to be forced to cut rates if growth and jobs continue to accelerate in the wrong direction because they just can't cut to fix what's happening fundamentally in the oil market right now.
So right now, if this continues and we continue to see this battle out, who knows where this is going to go if Trump can't get this deal done and across the line. Um, does this extend into ground invasion? All those kind of things that are bad for not only just the economy, but it's obviously bad for the global, wherewithal of what's going to happen in assets. Do you think that the Fed, under those conditions right now, I mean, how do you think Warsh plays this? Because he is in a this is even worse than what even Powell has been in. Now it's all kinds of crazy stuff coming at him.
No, when you think about it, like Powell had to do something that was unpopular in terms of cutting rates, but it was the obvious decision because you had growth and growth was sky high and inflation was
Yeah.
sky high. And when those two things are aligned, it's a pretty easy determination. You have to raise rates to try to slow both those things down. So this is the opposite. This is you have growth going down and you have inflation potentially going up. That's stagflation. That's the last place you want to be
Yeah.
because you have one tool to try to fight two battles, and that one tool can only take either one in one direction. So I
Hmm.
think they're gonna have to make a strategic choice. I think they're gonna have to come out, and you did hear Powell allude to this. He said our tools can't solve what is happening in terms of the oil market right now.
Yeah.
Our tools don't impact the fact that that whole oil capacity has essentially been taken off. He can raise rates to whatever he wants to raise rates to. If oil's not flowing, it's gonna go up. It doesn't matter. So I think he's gonna have to come in and essentially start his term by drawing a hard line that's gonna cause a lot of controversy in terms of the direction he's gonna go. And like you said, Powell had the obvious thing of saying, look, these two things are going up, therefore
Yeah.
we have to raise rates and bring them down. Warsh is gonna be in a tough place. I continue to think that I just have such a hard time believing he's not going to do what Trump put him in power to do, which is cut rates. I just think that's the decision that they've already set on.
So you think the cut rate is the model? This, of course, potentially would implode the issue, I think, around the economic certainty of what's happening. Jobs would continue to, well, I don't know. If we continue to see skyrocketing inflation, because that's essentially what he would not been able to control, we may see a little bit of a softening in the job market, but I'm just not sure about that just because of all the implementation that we're seeing around AI now. So there's just so many wild cards that this plays into. How do you think a year from now, Warsh has been in office for, 8, 9 months. Where do you think we are?
Yeah, so my big prediction is like if I was to just like say like out like there's so many different factors that could lead me to go in any direction, but I would say looking at a year or two from now, interest rates are half of what they are today. This entire situation in the Middle East, we're not even thinking or talking about it anymore. I mean, I don't think you're ever going to see a time period in which, in the current state, Israel's not fighting with Iran. Like they're going to keep fighting. I
Yeah.
think oil will be back flowing. I think the United States is going to see the importance of having a lot more energy independence locally. And I think there's going to be a lot of pushes on that front. I have a really hard time believing because of the strength of the United States and how they're dominating AI in this very early stage and how they're positioning to dominate crypto, that these things won't be so much more important for the United States economy over the long run that it's going to be a net positive for where we stand. I think the internet was a great example of that. We dominated the internet, and as many jobs as the internet disrupted, the economic capacity, the new companies it created were all so beneficial. I think we're probably going into a point off the backpack of crypto innovation, off the backpack of AI. We're going to see ramped up growth in the United States, and we're going to continue to be the technology hub and spoke of global markets. And that will allow the United States to sit at a lower interest rate position, which Trump wants it already.
Yeah, I think, okay, so what do you make of, you and I talked a little bit about Jim Rickards, him mentioning XRP as a potential alternative asset. But at the same time, there's a lot of people out there. I shouldn't say a lot. There's a handful of analysts. One that I follow that is in complete contrary to the consensus is that he thinks that this is only going to anchor American energy dominance by everything that's going on. His thesis is that China is progressively losing access to the cheap oil in Iran, which is, we know it's heavily discounted and it's underpinned by essentially hedged energy and geopolitical strategy with Iran. So if he's right, because he's the alternative to it, is that the petrodollar is not falling, that it's going to get him. What would you say to that argument?
Look, I mean, I think that's probably where, if you're looking at where the United States is with Venezuela, I mean, I think that's a big portion of what Trump is trying to achieve in one way or the
Yeah.
other. I mean, I think the idea that, I mean, if you look at who the largest oil producer is in the world, this is like kind of counterintuitive. If you've never looked at it, it's the United States.
Yeah,
We
U.S.
built out our oil refinery in a way that doesn't make a whole lot of sense. I mean, we're not very good at refining the oil that we're creating, and now that we have access to in Venezuela, which I think is a little bit of a problem, but those things can be fixed. I think ultimately this all goes back to a vision that Trump saw that I think is correct, in which the United States needs to become a lot less dependent on Chinese manufacturing and a lot less dependent on global oil supply. And if we
Yeah.
can bring those things in house, I think we control our own destiny a lot better. And then you're in
Yeah.
a situation where we can ramp up oil production. We can ramp up a lot of the manufacturing to a level where then we can become that stability piece in the global oil market. And if I was to guess, that's probably where Trump wants to take it. He even said in his speech the other day, hey, don't buy oil from the Middle East. You should just come to the United States. And I would guess that is where he wants this to be positioned. So I do buy into that argument, but I don't buy into it in the short term because it's not going to be something that happens overnight here.
Yeah. Well, and the point that starts to get very risky, I think, for the EU is everything above $100, which we're setting at 103 a barrel right now. And this all, I know for all of you, you're thinking, why are we talking about oil and Iran and all? Listen, this drives basically the core economy, and the core economy is going to dictate how assets behave. And when your core economy is in an inflationary model, which is what we're in now, assets are going to behave in that way. Many people will say, why isn't XRP moving if in fact that is the case? What would be your argument on that?
Oh, I think right now, I mean, I was surprised that XRP even got to where it was at the back half of 24 with the high interest rate regime we were in. I mean, it's just historically been a very difficult regime for growth assets like something like a digital asset. I think the
Yep.
fundamentals were so outweightingly bullish for something like XRP with the emergence of ETFs, with the
Hmm.
emergence of XRP coming into the mainstream with the end of the Ripple SEC case, that regardless of how trash the liquidity profile was for growth assets, XRP and some of the other blue chips, you did not see a full on crypto run, right? You did not see
Yep.
this disperse to the majority of the market. And it's because we were just not in a good liquidity cycle for digital assets. So I think right now we're kind of in this position where we sort of stalled out on the fundamentals a bit, right? Clarity got pushed off. We had all these great developments for XRP in terms of your strategic positioning plays, but we still haven't seen the macro environment really align where with growth assets taking off. And I think
Yeah.
if we do potentially see a scenario where one, we do get clarity in the United States, that's going to be a big fundamental driver. But if you couple that, which where I personally think Warsh is going to take interest rates, which is down, I think you actually get a little bit of a scenario where you get rocket fuel dumped on the fundamentals with a better liquidity profile for digital assets. So I would just say, look, it was miraculous to see XRP really buck the trend of high interest rates at the end
Yep.
of 24. But without all those fundamental developments continuing to roll in and roll in and roll in for XRP, the digital asset space just wasn't able to buck the macro trend, which to your point is what you're exactly right. That's why we need to focus on these things because
Yep.
that global swath of money at the Federal Reserve level is what
Huge.
controls the direction of markets. That's who has their thumb on the scale more than anyone.
Look at this data right here. I want to show you something because this is pretty surprising, I think, for a lot of people. They may not completely understand this, but stablecoin volumes could hit 1.5 quadrillion by 2035. Quadrillion. Okay. So this was Chainalysis. They just did a release on this. They're saying that basically 28 trillion right there in real economic volume, growing 133% per year since 2023. At that pace, without any additional catalyst, volumes would reach 719 trillion by 2035. We're talking about growing in an area where we don't have, in most cases, we didn't have genius and we didn't have clarity, and you didn't have the world using them. So you think they're onto something here? 1.5 quadrillion, really? I mean,
It's so obvious. And like, I always say this is an argument, not so much for this podcast, but when I talk to like a lot of the no coiners, it's like, dude, can I just show you this stat right here? And like, do you think this is significant, right? Like, how can you close your eyes to something like this and say that this doesn't matter?
yeah,
Because this is direct proof that everything that we have been focused on over the last couple of years is in massive demand from the market. And you have to ask yourself, why is the market, right? Because for the longest time, it's like the biggest counter argument I got from no coiners was like, oh, it's just the same thing, right? Like, what's really the point? It's so much more efficient, so much easier to use, so many less intermediaries that
yeah,
all of those things in combination is making people pivot from their existing flows to using stable coins on the back end. And with what you said exactly, with almost no clarity on the even regulated side of this thing. So
Exactly.
people are
Yeah.
taking the business risk of saying, look, we might not know fully how we're allowed to use these things yet, but it is so impactful for our business. We're
Hmm.
making that decision anyway. There is
Yeah.
no better validation for a product set than that right there, especially with the growth and the volume we're seeing.
Well, in the area that I think will maybe break down the arguments that I think I know I get them all the time. I know you do. Because there's still a lot of people. It's a very small percentage that even own crypto, even though I know we see it a lot because we're drinking the Kool-Aid from the same place everybody else is. But this statement right here, I think, is one that really matters a lot, and that is the second force is stablecoin acceptance at the point of sale. So what they're talking about is when you go out and buy retail or you're on a website and you're buying at point of sale, we're going to see more merchants starting to integrate stablecoin. If that friction disappears, and I think it will, this will be indistinguishable from swiping a card. And at that point, it is unbelievable what this adds another 232 trillion in annual volumes by 2035 if we
I
see
I
that
agree
kind
with
of
that.
number.
I think my only counter argument, which I have always thought Ripple has had the right view of it, is like I just don't see a future in which like me and you maybe, but like the average person is
Mhm.
going to be going with stable coins on their wallet to go purchase things. Like my idea is that like all my friends, they don't stop using their JP Morgan Chase card or they don't stop using their BOA card, but they're using
Mhm.
cryptocurrency without even knowing it because that's what
Exactly.
Bank of America has chosen to settle these transactions and send to the merchant on the back end for those flows. So like the only thing I would say is like, yes, the point of sale person is accepting the cryptocurrency, but they might not even have to know they're accepting it, right? It just might
Right.
be that the Stripe terminal they've accepted is now rather than using the correspondent banking system on the back end in order to settle the transaction between those two parties, stable coins are just flowing between them. So I think that's absolutely the right take. And I think that's where we're going. I've just always been of the mindset that this is not a front end technology. This is a back end technology. Everything will look
Yeah,
the same to the person who doesn't care, but we understand how different the plumbing is on all of this stuff. That is always where I
for
thought the
sure.
future headed.
Yeah, for sure. Mikkel, when you look at the big events that are happening here at the end of this month, early May, you've got Bitcoin conference, XRP conference, Solana Avalanche doing an event down in Vegas. Then you have consensus happening like literally the next week. Okay. Um, do you think we're going to see major announcements coming from some of these major players? Do you think what would surprise you? Do you have any like lofty ideas about, ooh, somebody could come up with this?
You know, I don't know. I think this event is going to be very interesting, especially more on the Bitcoin side, because I think it's always interesting to see the difference in the market and the attendance in a bull market when prices
Mhm.
are up versus when
Yeah.
prices are down. So I think that's going to be super interesting. So I honestly, one of the things that I'm really interested to see is just like who shows up. Are you going to see the same sort of big heavy hitters at all of these things in terms of the Bitcoin side as we saw last year in terms of when the market was pumping? I think generally, my understanding of this is, and maybe this is a little bit of a boring and pessimistic answer. I think people always go into these events a little bit like hoping for like all these like big game changing things to be released at a lot of these things. And while I think there's a lot of normally good and fun fundamental announcements, I generally think normally people always walk away from it with like nothing like overly insane or overly impactful. So for me, the biggest thing is like how much of that community that was there because of the price rise and how much of the community that was there because things were exciting, how many of those people are there again? What does the overall attendance look like? Is this something where we've lost half the
Yeah.
viewers? Is this something where there's the same amount of people, everyone's just as jacked up as before? I think the
Mhm.
vibe is going to be really interesting at this point of time in the market.
That may be a good analysis too, because I think you're right. You look at the vibe of the industry because in many cases that is what draws in other people. The no coiners is usually their friends that are in it. That is kind of the first step, and in some cases, maybe their first real idea is, hey, I'm going to go to a conference and maybe try to digest this because I'm a high net worth individual. I've got some money here to invest. I need to really know what I'm doing. So you're right. You probably could see that. I think the key here for me is I'm very interested in the sector of DeFi. And I think we are going to see some very intriguing announcements coming out of both, maybe not necessarily Bitcoin, but definitely out of the XRP event. And I anticipate maybe even on the Solana and the Avalanche event that they're doing. It's like a side event. We may see some things happening there. But I know Solana's doing their big event at Consensus. That may be one for sure. ETHCC was pretty dynamic in terms of what they're were announcing last few weeks in France. So that's kind of where I am right now is watching the DeFi phase in
I've noticed
XRP.
too, like the XRP conference has always been, I think, a little bit. There's so much more going on like on the fundamental chain side of something like the XRP ledger. There's always excitement, I think, in the growth of what is happening in terms of what can be built and what is possible. Where I think something like the Bitcoin side of things, where Bitcoin has like been strategically focused, is a little bit more about price action. And I think that's something that is more dependent on what the asset itself is doing. So I don't know. It will be interesting. I've noticed for me personally going to both over the last couple of years, I feel like the Bitcoin event is very dependent in terms of who you see there based off price, where it seems like the XRP event, you see less of that. Really, it's just a lot of enthusiasts who are there regardless and independent of the stage of the market. But we'll see. I always find the Bitcoin event interesting. If you've been to both, which I know you have, they are very different in terms of what you
by
attend,
far,
in terms of the experience you get.
Yeah. A lot of big names there. So we'll be there, guys. If you do make it over to the event, make sure and stop and say hi. Mikkel will be back with us next Thursday. We're going to be doing this, as I said. It's a weekly podcast now. We'll probably give this one a name, something like a series name. I don't know. Mikkel Mastermind, something like that.
And next week, we'll be talking about our fourth ceasefire, and we'll be
Yes. Yeah. Hopefully, where the market is heading, hopefully. But we'll see, because things are getting a little bit dicey out there. Bitcoin, what is it trading at right now? 71.9 right now as we're recording. So interesting, because that usually dictates some of the other markets. You guys know what to do. Make sure and hit the like button, subscribe if you haven't, and share this with someone out there, because there's a lot of people that know nothing about this today, and they're just beginning to learn. So that's the best thing you can do. And thanks for stopping in on another episode of the XRP podcast. Take care.